Welcome back to the third part of our series Building and Explaining a CCA Comps Trading Multiple Tool. Today we will conclude the building of our relative valuation Excel tool by defining output tables for further analysis. As said, this video will finalize the model and focus primarily on the structure before we start analyzing the data, multiples, and discuss our exemplary peer group in the next part of our series. So let's begin. First of all, we build a table including every peer we have on our long list. The reason behind that is simple. The table, as the name of the worksheet indicates, should provide an overview of all multiples, financials, etc., thereby allowing to investigate or analyze potential outliers, missing data, and so on. We will get to that in a minute. Every data point or item is linked to the calculation sheet and no calculation is performed on this worksheet. So if you would like to see how the multiples are calculated, please see part 2 of this series. First, we link the company name to the respective sheet, followed by the supplementary columns, which you can define in the control sheet, as you can see here. The objective of these columns is to provide additional information like, for example, country or financial year end, or other KPIs which might help to analyze or compare the companies. In addition, we also add the EV of every peer to get a sense for the size of the respective company. Next, we link the calculated multiples for the respective time periods, LTM or calendar year, depending on the selected time horizon, and the expected years from the calculation sheet, as you can see here. This is straightforward and the key information of the table. However, we also add basic financial information like margins and growth rates to get a better understanding on potential dynamics behind a certain multiple. For example, as you can see on the formula to calculate a multiple, the reason for a high multiple could be a relatively low profitability KPI, like EBITDA, as the smaller the denominator, the higher the multiple. On the other hand, an extraordinary high or low share price could also distort the EV calculation, why we introduce another KPI in the analysis video showing on what percentage level the current share price is in relation to its 52 weeks high to see if there are certain extraordinary developments. Sales growth is another indicator if there are company-specific dynamics which are above or below the market growth average, as defined by our peer group. You see, it is always wise to check not only the multiple itself, but also other financial metrics to get a better understanding on potential implications. Last but not least, we include a simple switch to exclude specific peers to analyze the impact on the stats calculation. You can see here. The stats, meaning min, max, mean, and median, are most likely the key takeaways of the table when looking at the peers, as this also defines your potential go-to valuation multiple in case you would like to value a non-listed company in the specific sector. Typically, the median multiple plus minus a certain threshold would be applied to the respective target KPI, for example EBITDA, to get a first EV indication or even a final value for a comparable company. In this respect, we also include another tab for an output table which already has formatting you could easily copy into your slide deck or other presentation. The output table is also designed to easily include or define peer groups. Which you can define or name in the control sheet and give you a better understanding on the valuation universe you are looking at. You can, for example, define certain industries, regions, products, or other characteristics to value a non-listed company. As we've shown in the basic parts, the names of the peer group as said can be defined in the control sheet, as you can see here. So based on that, we finally have a look at our multiples and see that there are certain items which do not make sense at all. For example, a negative EV for Tesla, or certain multiples which are not calculated correctly. So this is something we will focus on in the next part of our video series when we analyze the data. So that's it for today's video. A rather quick run through the final sheets of our Excel model. As announced, the next video will be dedicated to check the automatically collected data and potentially make some manual adjustments. The resulting impact and the multiples will be discussed, and we see if we can have some insights in the valuation of our peer group. I hope you enjoyed the video, so please stay tuned for the next part. If you are interested in the tool or have any question related to this topic or valuations, please drop a mail to the address in the video description. In addition, if you're interested in other topics or our offering, please reach out. We are happy to assist you in training, valuation, or any related advisory. Thank you and bye-bye.